Welcome back, friends. If you are watching this right now, I need you to stop whatever you are doing and pay very close attention, because what I am about to share with you today could save you from a serious problem with the IRS, one that thousands of seniors are walking right into without even realizing it. And the scary part is, most people will not find out there is a problem until it is too late, until the letters start showing up in the mailbox, until the penalties start piling up, or until money they were counting on gets delayed or reduced. So please, stay with me through this entire video, because every single part of it is important for you personally. We are now in 2026, and the IRS has made it very clear that they are paying closer attention than ever before to senior filers. With new reporting requirements, updated income thresholds, and changes to how certain benefits are tracked, many seniors are unknowingly making errors on their taxes or skipping required disclosures altogether. These are not intentional mistakes. Most people simply do not know what the rules are, and that is exactly why we are here today, to make sure you are fully informed, fully protected, and not caught off guard. Let me start by telling you something that surprises a lot of people. Many seniors believe that because they are living on a fixed income or because they are receiving Social Security, they do not need to worry much about the IRS. They think their situation is simple, but that is not always true. Depending on your total income, your filing status, and the types of benefits or payments you receive, you may have reporting obligations that you are not aware of, and the IRS will not call you ahead of time to warn you. They will simply assess penalties, send a notice, or flag your return for audit. So let us walk through everything you need to know right now. The first and most important thing I want to talk about is Social Security income and when it becomes taxable. This is one of the most misunderstood topics among seniors across the country. A lot of people assume that Social Security benefits are completely tax-free, and for some people, that is true. But for many others, a significant portion of those benefits is actually subject to federal income tax. Here is how it works. The IRS uses something called combined income to determine how much of your Social Security is taxable. Your combined income is calculated by taking your adjusted gross income, adding any non-taxable interest you earned, and then adding half of your Social Security benefits for the year. If you are a single filer and your combined income falls between $25,000 and $34,000, then up to 50% of your Social Security benefits may be taxable. If your combined income goes above $34,000, then up to 85% of your benefits could be subject to tax. For married couples filing jointly, those thresholds are $32,000 to $44,000 for the 50% range and above $44,000 for the 85% range. Now here is the important part. These thresholds have not been adjusted for inflation in decades. That means more and more seniors are crossing them every year simply because of cost of living adjustments to their Social Security checks. So even if your income has not dramatically changed, your tax situation may have shifted without you realizing it. This is something you absolutely must report accurately to the IRS. If you received a Social Security benefit statement, which is the Form SSA 1099, you should have gotten it in the mail by early this year. That form tells you exactly how much you received in Social Security benefits in the prior year. You need to use that document when filing your tax return. If you did not receive it or if you lost it, you can request a replacement through your My Social Security online account or by calling the Social Security Administration directly. Do not skip this step. Do not guess at the number, use the official form. Now let us talk about another area where seniors frequently run into trouble, and that is pension and retirement account distributions. If you are receiving a pension from a former employer, a government job, or a military position, that income is generally taxable and must be reported. The same goes for withdrawals you take from traditional IRAs, 401k accounts, 403b plans, and similar retirement accounts. These distributions are considered ordinary income, and you should receive a Form 1099-R from the institution that manages your account. This form will show you the total amount distributed and how much, if any, was withheld for federal taxes. Here is where people make a critical mistake. Some seniors take distributions and assume the taxes were already handled because a small amount was withheld. But the withholding may not cover your full tax liability, especially if you are also receiving Social Security or other income. You need to report the full gross distribution on your tax return, not just the net amount you received after withholding. The IRS receives a copy of your 1099-R directly from the financial institution, so they already know what you took out. If your return does not match, that is a red flag. There is also the matter of required minimum distributions, which many people call RMDs. If you have a traditional IRA or employer-sponsored retirement plan, and you have reached the age where RMDs are required, which is now age 73 under current law, you must take a minimum distribution each year and report it as income. Failing to take your RMD, or taking less than the required amount, comes with a steep penalty. The IRS can charge you an excise tax of 25% on the amount you should have withdrawn but did not. That is a significant hit. And while there have been some penalty relief provisions in recent years, you should not count on those protections continuing. Take your RMD, report it properly, and stay compliant. Let me now bring up something that has been catching a lot of seniors off guard in recent years, and that is benefit payments that are considered taxable income but that people do not think to report. This includes certain disability payments, lump sum settlements, workers' compensation in some situations, and even some veterans' benefits under specific circumstances. Now, not all of these are taxable, and the rules can be complicated. But if you received any kind of lump sum payment, legal settlement, or retroactive benefit payment in the past year, you need to verify whether it needs to be reported. Do not assume it is exempt without confirming. One area that is particularly important right now is SSDI, which stands for Social Security Disability Insurance. SSDI benefits follow the same taxation rules as regular Social Security retirement benefits. So if your combined income exceeds those thresholds I mentioned earlier, a portion of your SSDI may be taxable as well. SSI, which is Supplemental Security Income, is a different program and is generally not subject to federal income tax. But even SSI recipients may have reporting obligations in other areas, particularly if they have other sources of income or assets that need to be disclosed to the Social Security Administration to maintain eligibility. Now, I want to take a moment to talk about something that is increasingly relevant as we move through 2026, and that is unreported income from part-time work, gig work, or self-employment. A growing number of seniors are supplementing their income by doing freelance work, selling items online, driving for rideshare services, or providing services in their communities. If you earned income from any of these activities, even casually, the IRS expects you to report it. And beginning in recent tax years, the reporting thresholds for third-party payment platforms like PayPal, Venmo, and others have been changing, meaning more of these transactions are being reported directly to the IRS. If you received a 1099-K form this year, that is why. You need to include that income on your tax return. Similarly, if you sold a home or any other property in the past year, there may be capital gains to report. The good news is that if you sold your primary residence and you have lived there for at least 2 of the past 5 years, you may qualify for an exclusion of up to $250,000 in gains if you are single, or $500,000 if you are married filing jointly. But this exclusion is not automatic. You still need to report the sale and claim the exclusion properly on your return. Many seniors skip reporting home sales altogether because they think they owe nothing, but the IRS still needs to know about it. Let me also address interest income and investment income, because even modest amounts need to be reported. If you have savings accounts, certificates of deposit, treasury bonds, or other interest-bearing accounts, the bank or institution should send you a 1099 INT form showing how much interest you earned. Even if the amount is small, say $20 or $30, it still needs to go on your tax return. The same applies to dividends from stocks or mutual funds, which are reported on a 1099 DIV form. These forms go directly to the IRS as well, so they already have the information. Your return simply needs to match. One more thing I want to make sure we cover is the situation with health savings accounts and Medicare. Once you enroll in Medicare, you are no longer allowed to contribute to a health savings account, also known as an HSA. If you continued making contributions to an HSA after your Medicare enrollment date, those contributions are considered excess contributions and are subject to a penalty tax. You would need to withdraw the excess amount and report it. This is a situation that comes up more often than you might expect, particularly for people who enrolled in Medicare mid-year and did not realize contributions needed to stop at that point. Now, I know this is a lot of information, and it might feel a little overwhelming. So let me give you some clear and practical guidance on what to do from here. The first thing I want you to do is gather all of your tax documents before you sit down to file. That means your SSA 1099 for Social Security, your 1099-R for any pension or retirement distributions, your 1099 INT for interest income, your 1099 DIV for dividends, your 1099-K if you had any payment platform income, and any W-2 forms if you had any employment income. Having all of these in front of you before you start will make the process much smoother and reduce the risk of missing something. The second thing I encourage you to do is consider working with a qualified tax professional, especially if your situation involves multiple income sources, a home sale, retirement account distributions, or any kind of disability benefits. A good tax preparer or CPA who has experience working with seniors can make sure everything is reported correctly and that you are taking every deduction and credit you are entitled to. This is not a luxury. It is a smart investment that can save you money and protect you from costly mistakes. If the cost of a tax professional is a concern, I want you to know that there are free tax preparation services available specifically for seniors. The AARP Foundation Tax Aid Program provides free tax assistance to people 50 and older, with special attention to those who have low to moderate incomes. The IRS also runs a program called the Volunteer Income Tax Assistance Program, known as VITA, which offers free help to eligible filers. You can find locations for these services through the IRS website or by calling the IRS helpline. Third, please do not ignore any notices you receive from the IRS. I know those envelopes can feel scary, and a lot of people set them aside hoping the problem will go away on its own. It will not. IRS notices often have strict deadlines, and ignoring them can lead to additional penalties, interest charges, or enforcement actions. If you receive a notice and you are not sure what it means, call the IRS directly, contact a tax professional, or reach out to a local taxpayer assistance center. There are people available to help you understand and respond appropriately. And fourth, stay informed throughout the year, not just during tax season. Tax rules change, benefit programs change, and what was true 2 or 3 years ago may not be accurate today. That is exactly why this channel exists, to keep you updated and make sure you have the information you need to protect yourself and your benefits. We cover these topics every single day so that you never have to feel lost or caught off guard. I also want to remind you that the IRS does have programs to help taxpayers who are struggling. If you owe taxes and cannot pay the full amount right away, you may be able to set up an installment agreement to pay over time. If your situation is especially difficult, you may qualify for an offer in compromise, which allows you to settle your tax debt for less than the full amount owed in certain cases. These options exist, they are legitimate, and they are worth exploring if you find yourself in a difficult situation. The bottom line today is this: we are in 2026, and the IRS is more attentive than ever. As a senior, your income situation may be more complex than it looks on the surface, and there are reporting requirements that apply to you that many people in your position do not know about. Social Security income can be taxable. Retirement distributions must be reported. RMDs must be taken and disclosed. Part-time or gig income counts. Interest and dividends count. Home sales must be reported even when no tax is owed. These are not optional disclosures. They are legal obligations, and meeting them is the best way to protect yourself, your income, and your peace of mind. You have worked your entire life to reach this point, and you deserve to enjoy your retirement without the stress of unexpected tax problems. So please take action today. Gather your documents, reach out for help if you need it, and make sure your tax return for this year is complete and accurate. You have got this, and we are here to help you every step of the way. If this video was helpful to you, please give it a thumbs up right now. It helps more seniors just like you find this information when they need it most. And if you have not already subscribed to this channel, please do that right now and make sure you hit the bell icon so you never miss an update. We come out with new videos every single day covering Social Security, Medicare, SSI, SSDI, and everything else that affects your benefits and your financial security. Share this video with a family member or a friend who might need to hear this information. You could be doing them a really important favor. Thank you so much for watching, and we will see you in the next one.